Hi dear friends, today is September 18. Let's discuss the technical charts of the euro and the British pound and try to predict their further dynamics. The European currency has reached a new one-week high. The euro's growth was capped by weak economic data from the EU yesterday. Later, the US presented decent statistics. I told you if US data were better than expected, the US dollar would regain its losses. This is what actually happened. US retail sales were expected to contract, but in practice, the indicator locked at 0.1% uptick in August from a month ago. So the US dollar regained its footing ahead of the policy meeting of the Federal Reserve. The focal point today is the Fed's decision on interest rates. Let's check the economic calendar. The consumer price index for the Eurozone will hardly influence market sentiment. The CPI is likely to match the consensus. The annual CPI is expected to stay flat at 2.2% in August. The annual rate is very close to the ECB target. The core CPI is projected at 2.8%, so inflation has been developing according to official forecasts. This paves the way to further rate cuts. As for the crucial event today, the odds are that the FOMC will lower the funds rate by 25 basis points from 5.5% to 5.25%. Markets are also alert to the press conference and updated forecasts. If the funds rate is slashed by 50%, this jumbo rate cut will deal a blow to the US dollar. In turn, the euro, the pound sterling, and other risky assets will gain ground because this will confirm the Fed's determination to embark on monetary easing. It means that the Fed aims to bolster economic growth. Interestingly, the US economy doesn't need rapid rate cuts. The US labor market is cooling down, but inflation still exceeds the target level. Perhaps problems in the labor market are seasonal. Thus, a rate cut of 25 basis points is enough to improve some economic indicators by the year end, in particular, to bring down unemployment rates. Hence, markets will be focused on Powell's press conference. His dovish remarks will perish for the US dollar, benefiting the euro and the British pound. However, if Powell's speech is neutral based on fundamental metrics, the US dollar will advance for a short while. So let's pay attention to Powell's rhetoric. Now let's move on the technical charts. The euro touched a high of September 6 but could not overcome it. A small downtrend correction is unfolding ahead of the Fed's policy meeting today. I will go long in the first half of the day during a false breakout at 1.1113. And 1.1130 is the middle of the sideways channel. In case of an opposite test, it will be a good idea to buy the euro with a target at 1.1146. If the Fed's rhetoric is too dovish, we could see hard targets such as 1.1176 and even 1.1199. Then I will plan short positions bearing in mind a 25-30 pips drop. Short positions against the trend will be relevant on the condition of a false breakout. We can sell the euro in the first half of the day from the upper border. Besides, 1.1130 will be a good level for going short in case of active selling. A breakout of 1.1113 with an opposite test could push the euro down to 1.1097. The resolute Fed stance on interest rate will open the door to 1.1074 and 1.1039. Here I will plan long positions during a rebound, bearing in mind a 30-35 pips upward move. Then I will open long positions at 1.1074 and 1.1097 on the conditions of a false breakout. The British pound weakened more seriously than the euro. Today, the UK is due to release the CPI, which is expected to grow to 0.3% in August on month and to 2.2% in annual terms. The annual CPI has also approached the Bank of England's target level. However, the core CPI could have jumped to 3.6% from 3.3% a month ago. This could reinforce the pound sterling, so the Bank of England might ponder whether further rate cuts are appropriate for the time being. Fundamentally, the UK economy does not appeal to more rate cuts. Let's wait for the actual data. If the pound declines to 1.3146 and has a false breakout after the US economic data, there will be a good entry point for long positions with a target at 1.3175. A breakout of this level with an opposite test in case of sudden inflation growth in the UK. We will have another entry point for long positions with the targets at 1.3201 and 1.3220. The dovish pad will open the way to 1.3363 and even 1.3300. These two levels could be used for short positions, bearing in mind a 30-35 pips down. Besides, a false breakout of 1.3175 and 3201 will be a nice point for short positions. A breakout of 1.3245 with an opposite test following the UK inflation data more push the pound-dollar pair to 1.3115. We could expect 30.85 and 30.60 provided that the Fed is determined. Then I will plan long positions from these levels at a dip. That's all for today. Good luck.